Okay, so today we're going to be talking about turtle soups, right? And how to trade turtle soup. So I'm going to give you a really nice turtle soup play that I see often, and I'm going to share it with you and how you can capitalize on it. Now, but first things first, credit where it's due. Turtle soup is the original name turtle soup, it came from Linda Rask. I think I don't know, I might have pronounced her name wrong, her last name wrong, but I think Linda Rask is how you pronounce it. And she talked about turtle soups in a book called Street Smarts way back in the day. I'm not big on trading books really, other than Mark Douglas's work, but that was also another book that I absolutely loved that I read actually quite a long time ago. Like this is actually before I got into and started even messing around with SMC. That was actually a book I read a while back, which was Street Smarts, and it was an amazing book. And I recommend, again, I'm not getting paid to say this, but I recommend everybody pick up that book and give it a read. And that's where I actually first learned about turtle soup way back in the day. And then, of course, after I got into ICT's concept, I'm hearing turtle soup again. But of course, he added like his own twist to it to fit him. Just a really amazing concept. And of course, ICT, he's given credit to Linda Rask as well. Like he's openly said that that's where like turtle soup was basically first mentioned. So I just want to make that clear as well. No, I don't want anybody to believe I'm saying ICT stole it from Linda Rask. Nope, he's openly said he heard that concept from him and from Linda, and then he obviously he added his own twist to it in regards to what he knows about price, and basically made it its own. So I'm going to teach you a nice turtle soup setup here. And it's not like just, I'm using this example on USD/JPY today because it's a really good example, but it's not like, once in a blue moon type of thing. Like you see these patterns repeat all the time if you're patient for them. If they repeat, you just got to be patient. So the turtle soup is basically this. Turtle soup is a fake run in the opposing direction for the sole intention of taking liquidity, but also to bait in market opponents on the opposite side of the market to then take, their stops as well, right? To take that liquidity. So that's what we saw in USD/JPY today. So here's the deal. When it comes to trading the turtle soup, you need a full understanding of price though. Let me say that you need to understand liquidity. You need to understand market structure, okay? That's the very first thing I want to make clear here. You need to understand liquidity. You need to understand market structure. Okay, this isn't one of those videos where you got to do this one little thing right here. You do it day in, day out. You're going to be a billionaire, right? Trading's very simple, of course, but it's a little bit deeper than that. Price is a little bit deeper than that. You got to have a little bit more of a fluent understanding of price and liquidity than that. Okay, it's not just like you do this one pattern right here. Day in, day out, never fails, right? Nope. You gotta have a full understanding of price. You gotta have a full understanding of liquidity. So let me just kind of break this down like a trade review. And I think that'll be the simplest way to go about doing this. So USD/JPY, we're gonna start on the higher time frame chart. So I'm gonna tell you what I was looking at this morning, first things first. So there's a few things here. USD/JPY this morning, coming into a new day, coming into London session, we were in this particular area. Look at this, where my cursor's moving. We were like right here. And what I noticed on USD/JPY, like the very first thing coming in today, what I noticed was we had a daily bearish fair value gap right here up above. See that? That's a draw on liquidity. For those of you that don't know what a fair value gap is, again, that is yet another ICT concept. And of course, if you want a full, complete understanding, 100% understanding on the concept, you need to check out ICT's channel. But of course, I made a video on it as well a while back. Like that was, I think it was one of my, I think one of the first videos on this YouTube channel. It's an old one. It's an oldie. But I made a video on fair value gaps and how to find them. Basically, that's all it is. I didn't really go into how to use them and everything, but just how to spot them. So that's really all you need. And this is the case. We have that's all you need to identify them in that video. So we have a fair value gap right here. And also, as I just said, I'm going to leave a link to that fair value gap vid in the video description. So you can go watch that after this one. So we have the fair value gap right here. And we're in London session and we haven't tapped into this level yet. So right away, I have a draw. I know where it wants to draw right away because I see this fair value gap. I see we just had this swing low put in. It's curling up at the moment. So, and I understand that it's going to want to likely in the near future draw up into this level. Okay. And this is important information. Again, it's going to tie into the turtle soup here in a moment. But as I was just saying, it's important to have that full, complete understanding of liquidity and market structure. So I understand that we have this portion of price. This is an imbalance. And we understand price doesn't like to leave areas like that. It's going to want to rebalance that price action. This area, it was too explosive. It was too strong. And it had a huge move lower. So it was not able to efficiently deliver this price action right here, making it an imbalance. And we understand it's going to want to rebalance that price action in the near future. I saw that. And also I saw that we had relative equal highs right here as well. At that same exact area, we understand the very strong draw, those relative equal highs right there. So that was like coming into this morning. I noticed that. I noticed that higher time frame draw coming into the morning. That's very important. Don't let that go over your head. Having that higher time frame, understanding where you are on the higher time frame, understanding where the next draw on liquidity is, understanding market structure, all that is it's essential. Because it builds that bigger picture. Okay. And then it makes navigating the lower time frame, identifying that turtle soup and capitalizing on the turtle soup much easier when you have the higher time frame outlook, when you know where that higher time frame draw is at. So we had the higher time frame draw being the relative equal highs. We had this imbalance up here. And what I noticed was on the 1 hour chart, let's go to that. What's the deal here? What is this? This is bullish market structure. Okay, it doesn't take a rocket scientist to see that this is operating within a bullish market structure. It's putting in consistently higher lows, consistently making new highs. That's a definition of bullish market structure. And then this is where we come into a new day. Let me actually go to the 15-minute as well to kind of clean it up even more. So you can see right here, look at my cursor. We come into a new day right here. This is where we enter London session. See this? And then immediately we have a push up in London session that ramps up higher. It just gradually climbs up. So it continues that uptrend. So think about what I've told you thus far, and let's connect the dots that we have. Let's put together these pieces of the puzzle that we have currently. We've already identified that there's a higher time frame draw in play right now. Like that was the very first thing that I identified on this chart this morning and again, I talked about it with my mentees. I talked about it in the free Discord chat as well. And by the way, the link to my free Discord chat will be in the video description as well, that you can, because I post a free watch list in there every single morning. I'm not going to get too sidetracked, just a little plug real quick. I post a free watch list in there every single morning. I got educational material, tons of other ICT, SMC, and even other traders that aren't even ICT. We got something for everybody in there. So if you want to join that chat, it's 100% free. It doesn't cost you a dime to join. There's a link to that in the video description. And I posted this chart in there this morning. I posted this setup in there. Beforehand, no hindsight. And we were going over this exact scenario. Okay. So as I was saying, the very first thing that I did was I identified that draw on liquidity. I identified that daily imbalance. I identified those relative equal highs. So I understood right away we're drawn up into this level. And then I also understood that the lower time frame trend extremely bullish and showing no signs of weakness. I understood that the trend is continuing to London session and it's still bullish. Now in that right here, I see a pullback starting to happen. Why do I have this noted right here? What is that? That is low of day sell stops. Okay. This is very important. This is a key sell side liquidity pool. Okay. Low of day is a big, huge liquidity pool. We understand that there are a big bucket of sell stops that are resting beneath this level. Because I want you to think about this through the lens. Look at this through the lens of a long, of somebody who's already in the play, who's riding this thing up higher, right? They see they're looking at this trend and it's extremely strong. They want to lock in gains, right? They want to continue to lock in gains. They want to keep their stop underneath of where? Where do longs want to keep their stops at? They want to keep their stops underneath of support. What is support? Support is an area on a price chart where price has failed to move lower in the past. That's the definition of support. So right here, we can see price came down and it failed to move lower right here. This is low of day. And then it ramps up, making this a established level of support. So we can anticipate there are a big bucket of sell stops underneath this level. Okay, because we understand longs are going to trail their positions and they're going to keep their stops under support. It's always been that way. Like traders basically do everything the same way, right? Stop underneath support, stop above resistance. That's how it is. So, and guess what happens? I saw this move lower right here and I saw it come down and I take these stops right here. And as I posted in chat, as I made very clear, that was a buy setup right here down into this level. That is a turtle soup. Right there, that's a turtle soup right here. This move down into these sell stops is a confirmed turtle soup play. It's that simple. Now, and we're going to go into how, like, where to keep your stop and stuff as well in scenarios like this, okay? And how you could actually capitalize on it. But that is like the turtle soup is a fake run in the opposing direction where price really wants to go for the sole intention of taking liquidity, but also baiting in market participants on the opposite end, or on the wrong end of the marketplace, because you kill two birds with one stone. You have the move lower and it knocks out the existing longs that have their stops beneath the support. It knocks them out of the play and it takes that liquidity. But at the same exact time, guys, you're also betting in short sellers, because I can understand how, if you're looking solely at like a 15-minute chart, for example, this looks very bearish and it looks very weak. Look at this. You got a fair value gap in here. See that? Look at that. Look at these big down close candles right here. So somebody's looking at this. A lot of people, not just somebody, like a lot of people are looking at this, and guess what? They think that's a shift in market structure. A lot of people did. A lot of people that were looking at this chart in London session, they thought that was a shift in market structure. They thought this move lower was. Okay? But it's not. It's just a stop run. It's simply a run on low of day sell stops. And if you thought that was a market structure shift, I mean, don't beat yourself up over it. That's fine. Okay, we're all learning here, right? And of course, nobody's right 100% of the time either. I have my moments where I get caught in stop runs still. With all my years of experience, with all the money that I made through trading, I still get caught in stop runs sometimes. So like when I like point this out, I'm not saying, ha ha ha, you got caught in a stop run, you're my liquidity, right? Like, some of these douchebags on social media do. That we're not that crowd, right? I'm just pointing it out and I'm educating you on it so you can avoid that mistake in the future. You're not going to avoid it all the time. As I said, you're still going to get caught in stop runs. I do too sometimes. It's fine. Don't beat yourself up over it. Learn from it. And I'm going to tell you why this was a stop run and not a market structure shift. Okay, so I'm going to explain it. Like, as I already said, like the higher time frame direction, we got that in play right now as well. So that's important information. We've already talked about that. We have the fair value gap, the daily fair value gap draw. We have the relative equal highs. That played a big role in it, having that press up, and why this didn't hold. But here's the thing. If you're focused on the 15-minute, it looks bearish, but I want you to go to the 1 hour chart real quick. And I want you to look at this, but now on a 1 hour chart, because pay very close attention and get out your notepad and write this down. The higher time frame has more significance. The higher time frame tells you the real story. So write that down. The higher time frame tells you the real story. So if you see something like this on a 15-minute chart, you have a shift like this, but then you go to the 1 hour chart and it's an entirely different story, right? Look at this. This is just a pullback. Like, that's literally just a pullback. There's no shift there on the 1 hour. It's still extremely bullish market structure, and it's just pulling back within that range. But not only is it pulling back within the range, not only is it doing that, but it's taking out sell stops, a huge liquidity pull, and it's tapping down into what? A bullish imbalance. And this is the next part of the equation for your turtle soups, for a powerful turtle soup setup, and also when it comes to keeping your stop at, where to keep your stop at, because fair value gaps make for good places to keep stops underneath of them in a bullish scenario, that is, right? So that's why that wasn't a shift in market structure, because I understood what the 1 hour chart was telling me. So I wasn't like faked. I wasn't faked in short, by what I saw on the 15-minute chart, because the 1 hour is going to hold more significance, being that it's a higher time frame chart. It's taking liquidity. It's tapping into an imbalance. We have the higher time frame draw. So like we have all these pieces of the puzzle coming together. That tells me, so I figured that this was going to be a fake out lower, just to bait in shorts. Because again, remember, what's the other side of the turtle soup? Well, this move, it takes out sales toss, but it also baits in shorts on the wrong side of the marketplace, because they think this looks very bearish. They think it's heading lower because it has that market structure, because it has the fair value gap right here. Where are they going to keep their stops at, guys? Where are shorts going to keep their stops? Where do they do? They keep it above resistance. Longs keep their stops above support. Shorts keep their stops above resistance. Okay, where's resistance? Right here. This is an area where price failed to move higher. There is resistance. They're going to keep their stops above that area. It looks like it's going to do it. Like it comes up into that imbalance. It does respect it. It looks like it's going to sell off. It baits in baits in some more short sellers, because now it looks like it's about to take out these lows, right? It's looking super weak. It's coming down. And then boom, it rips up and it takes those stops. So you kill two birds with one stone on the turtle soup setup. And then guess what? It draws all the way up. It rebounds that daily, which was which was that draw that we identified. Like the very first thing that I noted this morning was that higher time frame level, because I'll go from a higher time frame and I'll work my way down to the lower time frame charts. So I already knew likely we were going to drop into that level today. That was a point of interest. Like that was our higher time frame draws. So I understood that. I had all these pieces. That's what I mean when I say you got to have a full understanding of liquidity and market structure. It's not complicated. It's very simple stuff. But like you got to have a full, complete understanding of that to really be able to read price like this. It's not just like one little pattern and that's it. No, you need an understanding of liquidity and market structure. And that's literally all this is liquidity and market structure, what I got playing out right here. So that's what we saw. That's why I figured this was going to be a fake run. We came down. This was your potential entry. That's the turtle soup. The turtle soup basically is you enter as soon as it takes out these sell stops right here. So it comes down and those stops are your entry. You have willing sellers right here, willing to sell their position to you at a price that is undervalued. It's undervalued right here. And you're scooping up a bargain on this move lower. You know it, you understand it's a bargain based on everything that I already told you. The draw, all this stuff up above, you understand it wants to draw up there. You understand it's bullish. You understand now it's taking this liquidity. That liquidity, again, not to sound too douchey, but you know, their stops are your entry, right? Their stops right here are your entry. And that's just, it's just facts. That's just what it is. Those are sell stops and you're entering on those sell stops right there. That's the turtle soup. That's a fake run. And you anticipating that's a fake run based on everything I just told you. The draw, the run on liquidity, all that stuff, it adds up to give you a full picture. Now, where do you keep your stop at? Where do you keep your stop at? Where do your profit targets going to be at? How do you go about doing that? Well, that's where you look to your left. Now, sometimes, again, like, it's not always going to be like this exact signature, right? Like, or it's similar signatures. So it's not going to be like, for example, in this specific scenario, we have it taking low of day sell stop, but there are other scenarios where this might be Asian session lows. You're looking for like the same exact signature basically, but it's not always going to be like the same liquidity pool. For example, it's going to have some variations. It's not like the same exact identical price action like this, of course, right? But it's the same signatures. So like in this scenario, we got low of day, but in another scenario, it might be Asian session lows liquidity that is taken. The consolidation from Asian session, you enter once it takes out Asian session low liquidity, right? That's another, thing to look out for. So it's not just like low of day. I want to make that clear as well. It's not just low of day sell stops. It's just liquidity in general, basically. So we've already concluded that you're entering right here. You're entering, you'd have a limit order basically at low of day sell stops, and then you get tagged in. Where would your stop be though? Your stop's going to be underneath the fair value gap low. Fair value gaps are good places to keep stops, okay? Because if you're really correct on this play and your thesis is correct, that this wants to move higher, that this is a stop run, that this wants to drop into this area right here, a stop run shouldn't have that deep of a retracement. A stop run shouldn't, because the sole intention of a stop run is just to sweep that level. So it really shouldn't have that deep of a move lower if it's really a stopper. And if it does have a deep move lower, well, then you can comfortably say that you were incorrect and then you can keep it moving. So that's why you go with a fair value gap as low. Like it just removes the thinking and it's just a very clear place to keep your stop. Where's that at? So we tap down to the imbalance right here. 3 candles make the fair value gap. Look at my cursor. 1, 2, 3. And again, I will leave a link in the video description to my video, how to find fair value gaps. Okay. It's very easy, but it's 3 candles and it in between the top candle and the bottom candle, you should see nothing but body. They shouldn't be touching. That leaves an imbalance in there. See that? So that's another key thing here. Whenever you're taking those stops, you also want to see it tap down into an imbalance. Okay. So you're taking out low day sell stop and you're tapping down to a bullish imbalance while operating within a bullish market structure. So you can kind of see how it's all starting to add up here now. Like you have all these pieces of the puzzle that are adding up. You have the higher time frame draw. You have the 1 hour market structure bullish. You have it taking out liquidity. You have this imbalance right here. And then you have the 15-minute that looks bearish. That's the intention because it has to bait in short sellers. That's the intention of the 15-minute doing that, of having that fair value gap in the 15-minute, because now we have a big bucket of buy stops that are going to be pressed right, that are going to be placed right here. That's going to take it out later. So we have this move lower and it taps down. You're in. Where do you keep your stop? Underneath the fair value gap low. Where's the fair value gap low? Remember, 3 candles make the fair value gap right here. 1, 2, 3. Your stop would be underneath this where my candles or where my cursor's moving, underneath that candle. Let me just note it so you can see it. Right there. Okay. And again, I posted all this in chat and how you could have played it this morning. But actually, let's grab the risk reward tool just so you can see it. So you got in, remember, you got in like right here. You got in, you swooped up low of day sell stops. Those stops are your entry. You're going to keep your stop underneath the fair value gap below. If it takes out that, you can comfortably say that you were incorrect because the stop run, it shouldn't retrace that much at all. And I like the fair value gap because it just removes the thinking. It's just a very clear place to keep your stop. And then your profit target, you have a few options. Yeah, you could just take the low hanging objective, which would be right here. Or you could take a partial right there at that high. Or you could shoot for the higher time frame draw, which we were anticipating that it was going to draw up into today, which is up here. And then look at that, 1.70 in that area. That's how you would play the turtle soup. That's how you do it. It's super simple, but so effective when you have all these things where you want it, like the higher time frame draw. You have the market structure. You have the liquidity, key liquidity pool. You have the imbalance. All this, it makes for just a super clear picture. It comes together to make a good picture later on, right? So if it's still confusing to you, watch this video a couple times, and I want you to go into your charts and pull up this as well. It's 11/7/2023 at the time that I'm making this video. Okay, so November 7th, 2023. This is USD/JPY. So pull up your charts. I don't want you to just watch it. I want you to take notes on this video. I want you to watch it a couple times. And I want you to go into your chart and really look at this and really study this price action and what I'm telling you. Because like this isn't just some, once in a blue moon setup. Like this stuff repeats, guys. This isn't the first time I've seen this setup. We see it all the time. This type of signature. It happens all the time. And you'll get consistent setups with a turtle soup like this. And when you have everything in conjunction, like you have the draw, you have all this stuff. You have the fair value gap. You have the bullish market. You have the market structure backing you. Really nice, solid setups. Okay, you could build a career off that. You can build a living off that, and it's just a really clean setup. Okay, so hopefully you enjoyed this video. Hopefully you got some value out of it. If you did, leave a like, subscribe to the channel. I'll catch you later.